What's up, guys? T from Focus Trades, and been sitting here at the charts pretty much all day. It's about 3 o'clock in the afternoon right now. Other than going to the gym and my parents real quick today, started around 4 o'clock this morning, and I put an entire day here into chart work. So really working my ass off today, guys, getting prepared for the week ahead. And I got a beautiful setup here that I want to share with you guys. So I'll make this a quick video. I'll go over the different variables, the game plan, all that good stuff. And the setup that we're going to discuss here, guys, is an hourly squeeze on Apple. Now, before we jump into that, major thing that you guys need to be aware of is the fact that the market is at a pretty critical level right now. Now, we finally got the close above the 200 on Friday for the Qs as well as the SPY. The SPY made a pretty decisive close above that 200-day moving average on Friday. That's a bigger picture thing that we've been focusing on. You know, whether or not the market can finally remount that 200 with some strength behind it, or if we see kind of what's taken place the last few times where we get that gap up and then a huge move back to the downside. So yes, we did close above the 200 on both the SPY and the Qs, but as you guys can see, that quick pop above the 200 doesn't always mean anything at all. In fact, the last 3 times that we've made this similar pop above the 200, we've immediately gotten pushed right back to and well below that 200. So in terms of the market strength, bearish, bullish, taking all things into consideration, we're not in a bullish environment just yet. You know, the fact that we've closed above the 200 doesn't mean we're going to continue to rip to the upside. So keep that in mind. Heading into next week, guys, you take that into consideration. You also want to take into consideration that we are quickly approaching these December 3rd and December 4th levels. That was a huge supply zone going back in the beginning of December. That's where this major sell-off started. That's something you want to keep in mind. So we've kind of cleared the first test here for the market to get a nice strong close above that 200. Now the next thing we want to focus on, guys, is this level up here. You know, this December 3rd, November 7th, and October 17th. That's my birthday level. Every time we've gotten back up here, guys, when the selling started, we weren't able to go any higher. And obviously the biggest sell-off we've seen as of late was the one that started last December. So bigger picture, guys, those are a few things to keep in mind. The market is still at a critical level and could still make a sharp move, higher or lower, taking all of these things into consideration. So with that being said, that bigger picture thinking is what goes into my game plan and helps me structure what I'm looking for from a particular trade. So in terms of Apple here, guys, taking into consideration everything I just said, along with the trade war, all this crap we got hanging over our head right now, I'm not looking for a big swing here in Apple. I'm not looking for a huge, crazy rip to the upside. I'm not looking to scale into a massive position and hold this for days and weeks on end. Rather, I'm looking to take advantage of a beautiful, low-risk, potentially high-reward setup that I've identified here in Apple this weekend. So the time frame we're going to focus on here, guys, is the hourly chart. So without any indicators or moving averages or anything on the chart, visually, guys, you can see that Apple has been trading in this very tight range here pretty much since the beginning of this month. So as a general statement, last 2-3 weeks or so, Apple has just continued to trade here in this beautiful squeeze consolidation on the hourly chart. Now we can throw up a few different things here, guys. First thing I want to look at is just good old-fashioned Bollinger Bands. So like you typically see during a consolidation, the Bollinger Bands here, the top and the bottom one, are beginning to contract. And when those Bollinger Bands contract, guys, that's called a squeeze. This is something I took from John Carter, and this is much like a rubber band being pulled in both directions. And if you take a rubber band, I take a rubber band, and we begin to walk across the room, the further and further that rubber band gets stretched, the more energy it's building up. At some point, you pull that rubber band far enough, it's going to snap. A stock in a consolidation like this, guys, is much like that rubber band. All of this energy is being built up right here, and at some point, that thing is going to snap to the upside or the downside. Now, this is the importance of respecting the bigger picture and constantly monitoring the SPY, the Qs, and other big tech names. When you sit back and you take the bird's eye view and you respect the key levels of the market, and you do your best to time whatever individual trade you take with the same direction of the overall market, it makes figuring out which way this is likely to pop a little bit easy. So One thing I'm noticing here, guys, is that we continue to find support right at that lower Bollinger Band here. So that's something worth noting heading into Tuesday's session. We continue to find support here at the bottom of that Bollinger Band. And we also continue to see resistance here at the very top. So essentially the move that we're going to look to trade this week, guys, is going to be a move above and out of this tight consolidation here of the Bollinger Bands, or a move below and away from this range right here. So we could this week potentially see a nice breakout and a move through and above that Bollinger Band, and that's a trade that we want to play to the long side. And if the market is weak, guys, just as easily, we could finally see Apple break out of this consolidation here and begin to move to the downside. That's a move that we want to play short. So if we can get a breakout this week, guys, out of this tight squeeze here, above the top of that Bollinger Band, that's a beautiful, low risk, potentially high reward setup that we can play to the long side. If Apple shows signs of weakness and rolls and falls below that range, below that bottom Bollinger Band, that's a great low risk, potentially high reward opportunity to go and buy some puts. And you don't have to assume or guess, guys, or try to predict which way Apple is going to go. We've identified a great looking setup here. Your job now come Tuesday, Wednesday, Thursday is to take that bigger picture, bird's eye view of the market where you can see the SPY, the Qs, other big tech names. You want to be able to have this bird's eye view, and we're just going to sit back and patiently wait to see which way the bigger picture goes. So this week, guys, heading into Tuesday and Wednesday, if the SPY and the Qs can continue to show signs of strength and continue their move to the upside, that likely gives Apple a good chance to break out of that consolidation to the upside. If the SPY and the Qs begin to show signs of weakness and roll back towards and potentially below that 200-day moving average, that doesn't fare well for Apple trading higher. If we get that indication from the market, if that's what the bigger picture is showing us, then we want to take advantage of that setup, guys, to the downside. So this is how you prepare to trade. You identify a low risk, potentially high reward setup. You put on paper your game plan in terms of when you would want to enter long, when you would want to enter short. And then we use that big picture view and wait for that overall confirmation of the entire market, the SPY, the Qs, the whole technology sector, Netflix, Google, Amazon, Nvidia. You take that whole bigger picture into consideration in whichever direction that whole big picture is going. Wherever the wolf pack is going, that's our indication and our gauge of which way we should try to trade Apple. If the market, the SPY, the Qs, big tech is all showing us signs of weakness on Tuesday and Wednesday, and they're all pulling back to the downside, you don't want to be thinking about trying to go long Apple. Things move as a group. At that point, guys, we're seeing signs of weakness on the big picture. We want to look to trade Apple to the downside on a drop out of this range. And on the other hand, if the market is showing us signs of strength, Amazon, Google, all the other big tech names are powering to the upside, that's our green light to be looking to take this trade long on a breakout out of this range. So you identify the setup, you identify where you want to enter long, where you would enter short, and then you have to have the patience, guys, to let the bigger picture give you that gauge of which way you should take that setup. The best trades, the best returns, the most consistent trading, and most importantly, the smallest, most painless losses come when you can time your entry on any individual stock with a move on the entire overall big picture. Regardless of whichever stock or setup you're looking, you want to time your entries long or time your entries short with whatever direction the group itself, the big picture, our market is doing. So that's my game plan, guys, heading into this week for Apple. I've identified this beautiful consolidation here on the hourly chart. I know where I want to enter long, where I want to enter short, and I know the bigger picture I have to respect. I'm going to watch the Qs, watch the SPY, watch that bird's eye view, and I'll let that determine which way I want to take this trade here in Apple. And then one more thing I'm noticing, guys, here that's interesting. If we pull up the 5-period and 10-period moving averages, Now, this is something we've been talking about in the group a bit lately. Golden cross and death cross. Golden cross is when the 5-period moving average, the green moving average, breaks above the 10-period, which is the black. A golden cross, when that 5 crosses that 10, is usually a good indication, at least in the short term, based upon whatever time frame, that you're going to see a move to the upside. A death cross, which takes place when that moving average, the 5-period, breaks below the 10, is usually an indication of a short-term weak move. So right here, guys, in this consolidation right now, we have that 5-period moving average finally starting to turn to the upside. So again, we've got the squeeze, we've got the Bollinger Bands. This is another indication we can use this week to help us gauge which direction is Apple going to go. If you see the market showing signs of strength, and that 5-period moving average offers that opportunity for that golden cross entry, that's even better. So those are the things I'm taking into consideration for Apple, guys. But again, long, short, whichever way I ultimately end up trading Apple is going to be 100% dictated by the bigger picture of the overall market. Market is strong, I'm trading this to the upside. Market is weak, I'm trading this setup to the downside. And if I can put this setup in my notebook and 3 or 4 other stocks with similar game plans, then I have got more than enough opportunity at my hands come Tuesday morning to go out and take my fair share of profit from the markets. So work your asses off this weekend, guys. Put in some good preparation work. Get those notebooks, put those game plans together, rest up, and Monday morning, or unfortunately, Tuesday morning actually, market is closed Monday, Tuesday morning will be here before you know it. So rest up, guys, work hard, get prepared, and I'll see you in a few days.